Okay. Good evening, everyone. Welcome to our PSP Energy Berhad IPO webinar tonight. PSP Energy Berhad will be listed on the ACE market on 4th of December. And our PSP Energy Berhad principally involved in the trading and distribution of fuel and lubricant product in Malaysia. The company majority business focus on the distribution diesel product both onshore through road tanker across Peninsular Malaysia and offshore via bunker vessels. Later on, our PSP Energy Management team will discuss it in detail. Here, we're going to honor the company Group Managing Director, Mr. Ong. Hi, Mr. Ong.
Yeah, hi everyone. Hi everyone. Good evening.
Hi, good evening. And our Group Financial Controller, Ms. Tan. Hi, Ms. Tan. Oh, okay. And another, our Group Financial Manager, Joyce Lim. Hi, Joyce.
Joyce Lim, yes.
Oh, okay. And another, our representative from Mercury Security Advisor, Mr. Yip. Hi, Mr. Yip.
Good everyone. I'm also Woon from Mercury Securities.
Hi, everyone.
To
Good
give
evening.
support to Rakuten for so kindly arranging this talk. Thank you very much.
Thanks for the opportunity. All right, without further ado, we'll start for the corporate video before we run through the presentation.
Being the most comprehensive commercial fuel providers in the industry, Pandamar and Synergy Petroleum was first started in October 2010. Through hard work and dedication, we became an authorized dealer of BH Petrol, marking our first major milestone. In 2012, we achieved another success, officially registered as PSP Group and expanded into PSP Marine and PSP Lubricants. From there, we grew into a leading one-stop petroleum solution provider in Malaysia, offering services across fuel storage tank, road tankers, lubricants, and bunkering service. To meet growing demand, PSP Group built 3 advanced storage tanks in 2016, adding 1.5 million litres of capacity. Today, PSP Group operate more than 40 units of high-performance road tankers, ensuring safe and reliable fuel delivery, even to the most remote locations within 48 hours for standard orders, and as fast as 24 hours for emergencies, to anywhere in Peninsular Malaysia throughout the day and night. Our modern warehouse and offices facilities, along with 3 vessels boasting over 2 million litres of capacity strategically located along the Strait of Malacca, allow us to reach customers swiftly at any port in Peninsular Malaysia. At PSP Group, progress also means responsibility. Aligned with Malaysia's Net Zero 2050 vision, we are committed to reducing greenhouse gas emissions by offsetting our carbon footprint through verified carbon credits, growing from 729 credits in 2024 to 1,728 in 2025 and beyond, and by installing solar panels at our facilities to generate clean energy, driving a greener and more sustainable tomorrow. Using advanced additives and strict ISO quality standards, PSP produces various grades of high-performance in-house lubricant brands designed for industries including truck, vessel, machinery, fishery, construction, and related industries. With its own brand of lubricants and distribution of trusted third-party brands, PSP Group also dealing with major fuel companies in the country, including Petronas, Shell, BH Petrol, Caltex, and Petron as a commercial fuel dealer. With the strong support of our valued customers and the commitment of our dedicated team, PSP Group strives to enhance our services and lead as your trusted one-stop petroleum solutions provider. Because PSP Group believe, if fuel moves your world, then allow us to deliver the fuel to you.
All right, thanks for the corporate video. And now we start the presentation. Over to you, Mr. Yip.
Ernest, is your side doing the presentation?
Can, no problem. Okay. So everybody can see the screen, right, for the corporate presentation?
Yep.
Okay. First of all, welcome everyone for this session. And thank you, Rakuten, for the arrangement. Okay. Yes, PSP Energy Bhd currently under the guard of his management, including Mr. Ong Ji Seng, who is the Group Managing Director, and also Ms. Tan Yen Ying as a Chief Finance Officer. So Ms. Tan has over 31 years of experience in her related field, and Mr. Ong Ji Seng has been in the industry for more than 15 years. So here is the PSP at a glance. So we are downstream oil and gas products providers. And then our core business are in trading and distribution of fuel and lubricant products. So we have our own asset, which inclusive of 2 licensed storage plant in Telogong, Auckland, and 42 road tanker and 3 bunker vessels. So this is the business model of PSP Energy Bhd. Okay, as you can see, and just now I mentioned, so the core business are inclusive of trading of fuel products, distribution of fuel products in road and bunkering services, and also distribution of our lubricant products. Fuel products are main fuel products are inclusive of diesel, fuel oil, marine gas oil, other fuel products also including petrol and kerosene. Well, in lubricant products, we have diesel engine oil, hydraulic oil, gear oil, marine lubricants, grease, which we sell to service certain functions to the customer. So the business model is we purchase and we sell. So we trading of business of the fuel products business. Why customer purchase from us? First of all is we manage to meet minimum order quantity from our established suppliers. Second, because we are in bulk purchase with our supplier in large volume, that's why we can enjoy competitive price from the suppliers. And third, we also offer credit lines to our customer, which up to 30 days. Here is a simple model demonstrations about that we are how our distribution of fuel work. First, we purchase fuel products in large quantity from our suppliers. Then we resell our fuel products to customer on bulk volume basis based on their requirement and needs. Then after that, we also distribute to customer using our own fleet and road tanker or even our bunker vessel. Well, for the lubricant products business, currently we have third-party brands of lubricant products. One's from Petroleum, and the other one is from Total Energy brands. Other than that, we also have our own brand of lubricant products, especially in diesel engine, hydraulic oil, and gear oil. Here, showing that the top 5 customer that we have in financial year end 2025. Nevertheless, we also having our ESG initiative from our company. We have installed solar panel to reduce carbon emissions at our warehouse. We also recognized by Shell that we enroll their carbon offset program so that we fuel our own road tanker. Here is our competitive strength. So we are currently located at Telogong, which is near to the Auckland. Then we have our lubricant distribution branch in Senai, Johor. At our warehouse, we have 3 silo tanks, which can store up to 1.5 megaliters of diesel products. Then we have our own warehouse, can store up to 2,000 drum of lubricants products. So we've been received certain outstanding performance awards from our suppliers. Some are from Shell, some are from Petronas. Here showing that we have 27 registered port that we can access to serve our customer. Here is the different size of the road tanker fleet that we have. Currently, we own total 42 road tankers. And we have our 3 bunker vessels, which they are in different capacity, as shown in the chart. We serve diversified of customer, mainly from wholesale and trading of petroleum products, transportation and logistic customer, manufacturing customer, utility and energy, and construction area. Here is the business strategy and future plan. The IPO process is served to acquire of a bunker vessel to help in our bunkering business. We thought about to expand another new another vessel to increase the capacity. And also, we also set up a new branch in the warehouse in Pahang. And we also set up an additional storage plant in the Tanjung Bras port currently. This is the view of the Tanjung Bras port with the existing 3 silo tanks situated over there. As you can see, the demand for Malaysia, the demand of the fuel are correlated with the GDP growth in Malaysia. Okay, here is the sales volume of our fuel and lubricant products from 2022 until 2025. Next, I will hand over my presentation to Ms. Tan for the financial highlights.
Thank you, Ernest. Next page, please. In terms of revenue, we achieved the highest revenue in history in FY 2025, mainly due to high volume sales to new major customer secure in FY 2024. Our GP margin decreased from 7.5% in FY 2022 to 4.8% in FY 2025, also mainly due to this customer from secure in this major new customer secure in FY 2024, which contributed to a lower GP margin due to bulk purchase from us. Our PAT in FY 2022 was 10 million. This was including a one-off impairment on trade receivables of 5.3 million. And our PAT decreased in FY 2025 to 14.3 million, mainly due to those one-off non-recurring transactions like unrealized forex loss of 3.1 million. Then the loss of business due to vessel dry docking for 2 months, estimated to be about 3 million, and also IPO expenses about 1.5 million. Besides this, actually our profit growth is quite stable. Ernest, please move on to next page. Our trading of fuel products, the percentage increased from 17.9% to 48.1% in FY 2024, mainly due to the same reason that we have secured a major new customer in FY 2024, which contributed to an increase in this trading of fuel products. Distribution of lubricant products, quite stable, from 2.9% in FY 2022 to 3% in FY 2025. Distribution of fuel products decreased from 79% in FY 2022 to 48.1% in FY 2025, mainly due to increase in this trading of fuel products. That's why the percentage in terms of total revenue decreased for this distribution of fuel products, despite there was actually an increase in sales volume. Ernest, please move on. This is a revenue by key products type sold. Our trading of fuel products contributed almost 48.1% in FY 2025. Same with distribution of fuel products, which includes in-road transportation and bunkering, also almost 48%. Distribution of lubricant products at about 3% of total revenue, which was quite constant. Then let's please move on. Our financial position are all in healthy position. Our total assets increased. Total liability also increased throughout the years. Shareholders' equity also increased throughout the years. Cash and cash equivalents are all in healthy position, all positive, and increased throughout the years. Total borrowing increased throughout the years also. Total borrowing actually mainly made out of this short-term trade facilities like BA. Current ratio was more than 1%, more than 1, which is in healthy position. Gearing ratio is about 1.5%, which was also in healthy position. Our receivables, payables, and inventory turnover days improving from FY 2022 to FY 2025. Ernest, we move on. So I hand over to you for IPO summary presentation.
So here is the IPO summary. Okay. Currently, this is the group structure of the post-IPO. So we are offering to listed in the ACE market with IPO price of RM 0.16. PE ratios is around 12%. With market capitalization of 171 million. Here is the utilization of the IPO proceeds. Around 15 million will be catered to purchase of the bunker vessels. And then 1.3 million will be general working capitals. 1 million for purchase of 7 new rock tankers. 4.9 million estimated listing expenses. And 12 million of purchase of fuel products to stock up. Here is the key date for our IPO. Here's my presentation. Thank you.
Thank you, Mr. Ong and Mr. Yip. And Miss Tan for the presentation just now. Okay. Are you guys ready for the Q&A section?
Yes.
Yes, we are. Some of it I have already typed in
Yup.
the box. I think you can just
Yeah, I saw it. Yeah.
do it as a man we have. We will be answering it together with the client. All right?
Okay, sure.
Sure.
Okay, then I ask this question for. Okay, any plan to launch the biodegradable or low carbon lubricant in line with the ESG trends?
So far for this, the low carbon, sorry.
Do you want
The-
to on, Mr. Ong? Do you want to on the
Mr. Ong.
camera?
Yeah.
Yep, nice. Okay.
Okay. So far, we still don't have any plan to launch any biodegradable or low carbon lubricant in line with this ESG trend. But maybe on future, we are planning to launch this product in future.
Okay. Okay. They got a top customer contribute like 38% of your revenue. Would you like to share more about it?
This top customer is namely in the prospectus is customer E. So this customer is the similar business, same like us, is doing the bunkering business. So doing bunkering business, and this customer is based at Singapore.
Okay. Based on Singapore, right? Okay, I think this just now have present in presentation just now. And do you have anyone to add on? How do you see the lubricant sales growing in Malaysia going forward?
Can I answer this one on
Yep,
behalf
yep.
of? Yeah, this is TK. I'm the project manager for PSP. Basically, it's like this. We supply the lubricant is for the industrial and commercial use. Okay, meaning to say it's heavy equipment and the machinery in the factory. As you can see, more and more, FDI, come into the Malaysia, to what they call it, to set up their factory. We see there is a demand over there. And just for your information, the company also capture quite a numbers of China clients factory. We supply them the fuel and as well as the lubricant. Thank you.
Okay, understand.
Now, you don't mind this Woon here to add on. One of the future plan of the company is to open a branch somewhere in East Coast, a branch office and warehouse, mainly to be closer to the East Coast customer of Peninsula, meaning Kelantan, Terengganu, and Pahang. So there will be more focused push of the lubricant product beside servicing the existing market.
Okay. Thank you. Okay. Okay. Then another question asking like, will PSP, your company, offer new lubricant formulation to attract more clients or just mainly compete on the pricing?
Okay. Let me answer this question. Basically, majority of the oil core, they don't own the formulation. The formulation is actually governed by various parties. There's two famous parties that they create the formulation. One is API, American Petroleum Institute. They have the guideline of all spec of diesel engine lubricant, grease, gear oil, or etc. And as of the what they call it in the Europe, there's another body to govern these things. We don't create our own formulation. Okay, and also we are very much rely on what the market wanted. Okay, example, in the one of our client, they are in the energy sectors, power generating. Okay, they are using the diesel generator. Their generators for their engine or etc. Yeah, it's very much the spec is stated in by the machine manufacturer that what suitable lubricants for the particular machine. Yeah.
Question asking about your operation. Could you share what is your operation challenges come with managing a mixed fleet of 42 road tanker and 3 bunker vessels?
Hello, this one I can answer. I think so far for the managing of the fleet 42 load tanker, I think so far it don't have any big issue for us because we have the full proper operation team and the management team. And for the 3 bunker vessel, we also manage with company have a ship manager to manage and with our operation team also. So for us, it's not any big challenging or issue. Thank you.
Okay, quite good for management operation. Okay. What kind of vessel traffic volume or marine trade route can Tanjung Paru's currently handle?
Okay, for this question, for the traffic volume and the marine trade route, for the traffic volume, I think so far still, if compare with the Poklang, I think Tanjung Bras still is not so heavy traffic. I mean, not so.
You see, our one is okay because our one is moving, it's waving.
Okay. So, and for the can Tanjung Bras to currently handle, maybe this one I need to come back to you after I check with the port.
Okay. How will PSP coordinate fuel supply for vessels that cannot directly dock in at the Tanjung Bras?
Okay, for this kind of customer, if the vessel cannot come in berth it at the Tanjung Bras, we will send our vessel to supply to them or use our bunker vessel to supply to the client vessel. Okay.
Oh, that means you have another bunker vessel to help them to fill up.
Yes.
Okay.
Or we will coordinate with the customer, see maybe if the customer cannot come in Tanjung Bras, maybe we can supply the customer at Poklang or where the location the customer need.
Okay, sure. Okay. Do you see any potential to serve cross-border client like vessel from Singapore or Indonesia?
Tom, maybe I answer. Now, basically, PSP has already served customer and deliver goods to customer base in Singapore, Dubai, Vietnam, Indonesia. But these are more of one-off kind of customer. The immediate plan is to tap on customer in Malaysia because if you look at the IMR report, right, right now, market share of PSP for the whole diesel industry is just below 1%. So if PSP can scale up the market share, let's say to 3%, now just imagine what kind of number the company deliver rather than focusing on developing overseas market because basically developing overseas market need time, need cost and all that and the outcome may not be certain since we know the Malaysian environment better. So it's the immediate plan is still to grow the Malaysian market. Thanks.
Okay. Maybe I take the last question. Is that all right, Mr. Yip? Are you typing?
Yeah.
Yeah. Okay. But I can't click any button for it. Okay. 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 There is one question pop up in Malay. It's asking how is the board make sure that the business is related to the party one fuller that with the business line.
Now, if I may help PSP to answer. Now, the board has in place policies on conflict of interest, related party transaction. So one of the governance issue that the board has included in the terms reference of its audit committee to look at related party transaction to make sure that it's an arm's length, normal commercial term, and not detrimental to the minority shareholder. So the audit committee, which comprises of all independent directors, will have to form their opinion. And then after forming their opinion, they will escalate their recommendation to the board for final approval. And also, in compliance with reporting, accounting disclosure, as well as Bursa disclosure, such related party transaction will be disclosed in the quarterly report, annual report, and also since if the company feel that such kind of recurrent related party transaction of a trading nature, they may just get the shareholder approval normally at the annual general meeting. So it will be a very transparent process for the shareholder to vote and approve beside the oversight responsibility performed by the audit committee on such matters. Thank you.
Okay, thank you for the explanation. That they have half question has been answered verbally and half question have been answered in written. Okay. I think we answer almost all of the question tonight.
Now, if I may, now basically is since your client are all investor in stocks, what are the compelling reasons to look at PSP as one of the investable stock that your customer should consider? Number one, basically is the management know what they do. Mr. Ong got more than 15 years of experience. The whole management team, they know what they do. Number two, to enter into this industry, there are certain barriers besides licensing. One is to comply with the standard of the oil major, let's say Petronas, all this, they have certain standard, the health and safety standard. And on top of that, the company is ISO certified on quality management. So these are the plus side. Then the company got storage capacity. To build a storage capacity, it will take some time because the tank have to be of certain thickness. It's all the safety standard. The tank right now is 1.5 million liter. Now, 1.5 million liter, the company, as disclosed in the prospectus, the inventory turnover period, it's up to 4 days. So just imagine 1.5 million turn 4 days. Now, the company, if you look at it, the sales mix is predominantly trading and distribution. Now, why they cannot scale up distribution higher, partly is because of capacity. So capacity, one, in terms of road tankers, which from the IPO, they are going to buy 7 new tankers. 2, they are going to buy an additional bunker vessel, which will carry a gross about 2 million liters. Right now, the existing 3 bunker vessel all add up is about 2.4 million megaliters. So there will be bunker facility. Now, the more exciting part of this IPO journey is called Tanjung Brass Port. Now, to give you a perspective on Tanjung Brass Port, basically this facility was operated by Petronas before to distribute a certain fuel oil. Now, from the picture that is shown, there are already existing 3 tanks that can store up 6 million megaliters of capacity. And also there is an existing jetty where the ship can park there. It's just like your car park next to a petrol pump and pump. So besides opportunity to store fuel that they can also distribute down to the southern region, all the excitement of Johor as a super growth state. Now, on top of that, the company, it's financially, if you look at the balance sheet for a company, so far performance no problem. They can ramp up the volume. They can maintain the price. That despite oil prices going up and down every day, so they are able to manage profitability and driving the volume to earn profit. Now, the other thing is, one of the plus side of this is, if you look at the company, gearing is within reasonable limit, about 1.5 times. Now, from the wise man, the bankers, some bankers have imposed gearing covenant on the group. The wise man say up to 3.5 to 4 times. So they are well within the gearing limit. Now, thanks to the other upside that the company can enjoy, in July, the Monetary Policy Committee of Bank Negara, they trimmed down the OPR by 25 basis points. So this trimming down of 25 basis points, the saving in the interest expense will go straight down to the bottom line. Now, on top of that, the company, although there's no formal dividend policy, the company will strive its best to declare as dividend at least 20% out of the distributable income for the year. So if you look at it, the business is simple, but there are barriers for entry for competitor. The market size is, based on the IMR report, the market size is talking about 156 billion or more. And PSP, unfortunately, the market share is less than 1%. So just put it in your mind, if PSP can scale up their market share to, let's say, 2%, how much incremental growth the company can achieve. In terms of banking line, they have full confidence of the banker. So after listing, I'm sure the credit profile of PSP will be better since they are more transparent with all the compliance with the listing requirement. Okay, now, any question, please feel free.
And Mr. Woon, just now quite clarified to explain the PSP Energy, the whole business operation and their competitive advantages. Okay. Also, I saw it, the few questions keep asking about the 2025 PAT, right? And yeah, I know Mr. Ip already typed in for
Maybe I just give a little
two
bit of
times. Yeah.
context in terms of why revenue is increasing, but then the GP actually rather stable or drop a little bit. The reason is because of changes in the sales mix. So as you know, trading business, like what we have mentioned, the trading business is very easy to scale up because it doesn't constrain by the distribution capacity. For the distribution business, we require the fleets, the bunker vessels, and also for the road tanker to distribute the diesels for them to do the selling. But trading is just a buy-sell volumes as and when you have the sufficient cash flows and the ready customers, you can then just do it. So in 2025 that year, trading business actually grew larger because there were more demand for the sales of this type for the trading sales of petrol for diesel products. So much of the company's capital was actually being used to go into the trading business, and then the distribution business that were constrained, and then their fleet and also their bunker vessels have already reaching quite a high utilization rate. So therefore, when we do the IPO, there were two main proceeds being used to grow the business. One is to expand on their capacity, whereby there will be more road tankers being purchased in order to enhance their distribution capacity fleet. So this would then definitely lead to an increase in their distributions business, provided that the demand for diesel will always be there and growing, which we do foresee this trend coming. Second thing is then when they purchase the bunker vessels to do the distribution business, it is also a new distribution per se. So this new bunker vessels is 2 million megaliters, which is comparatively the same capacities as what they have for their current 3 bunker vessels. So currently their 3 bunker vessels is 2.5 megaliters in total. So this new one coming in is equivalent to that. So you can assume that the growth rate will be actually quite amazing and enormous. So the third point that like what Mr. Woon have mentioned would be the Tanjung Bras port. So to put us in context, the Tanjung Bras port is a very big one compared to their Telok Gong currently. So the Telok Gong currently the capacity is 1.5 megaliters, whereas the Tanjung Bras port is 6 megaliters. And it is actually also located at the industrial area because in Malaysia, there's not many ports location. There's only a handful of it, and they managed to get a foothold in these strategic locations, whereby they would then be able to pump and supply the diesel for all the vessels berthing at Tanjung Bras port. And to put in context, the Strait of Malacca is one of the busiest shipping lines in the world. So the growth is rather promising. So moving forward, yes, we do foresee that there will be plans for the company to improve on its margin and also on their revenue. But in terms of the sales mix, we believe that the company believes that their distribution revenue contribution will slowly scale up as when all these business plans are being put in place. So in terms of their timing, the Tanjung Bras port, they are currently is undergoing refurbishment. It will be operationalized latest by the first half of 2026. Okay, so in terms of the bunker vessels, we are also looking about the timeline. So the bunker vessels is they're going to purchase a pre-owned. So then the time to market is very quick. It's just about 2 to 3 months. Once they have received the public issue money, and then to identify the bunker vessels. Then after some dry docking period, let's say about 3 to 4, 5 months, then they can also operationalize it. For the bunkers vessels, for the road tankers to be purchased even faster, because those road tankers are actually available to be purchased from all the car dealers. I hope that answered the question from your investors.
Now, in addition, if I may add, out of the IPO proceed, about 8 million ringgit, right, is allocated to buy fuel. 12 million, sorry. So if you look at it, 12 million to buy fuel, and I can turn it around, four days inventory turnover, let's say, my average trade receivable, assuming all sold in credit on credit terms, is about 40 days to 50 days. That's based on the prospectus. And if you look at the payable, the turnover is between 20 to 30 days. So you look at the whole working capital cycle, the 12 million allocated, how many times it can turn? So this will also scale up the capacity of PSP. Okay, thank you.
Okay, quite clear, Mr. Wu and Mr. Yip. Also, we touched about the receivable, payable also. Yeah. Okay. Yeah, I think there is no more question bump up and everything is quite clear tonight. Okay. Before we end this webinar, do you have any closing remark before we end for the night tonight? Like Mr. Wee, Mr. Woon, Mr. Ong, Mr. Tan?
I will leave it to Mr. Ong to make the closing remark. Mr. Ong?
Mr. Ong? Yep.
Thank you, everyone. Thank you, Mr. Yip. Thank you, Rakuten, Mr. Woon, and my team and all the investors. So if you have any questions, still can email to us and we can reply to you. Thank you.
Okay, thank you. Thank you, Mr. Ong. And yep, right now, once again, congratulations on your upcoming listing on the ACE market on 4th of December. And thanks everyone for tonight, the presentation and answer of the Q&A. Thanks, Mr. Ong,
Thank you.
Ms. Tan, and Joycey, Miss Yip, and Mr. Woon.
Yeah.
Mr. Yip, okay. All right.
Thank you so much. Thanks.
Okay, thank you.
Thanks.
Bye.